Hello everybody, this is Greg Gossett and today is Saturday, November 26, 2022. And thank you so much for coming and visiting me for another edition of the Gossett Trading and Mentoring Weekend Review. Hope you had a good week. Hope you're having a nice weekend. Hope you had a nice Thanksgiving. And this is what we're going to do today. This is going to be the format of the podcast. First of all, we are going to run the U.S. legal disclaimer. Secondly, we are going to come back. We're going to take a look at all the positions and trades that I made over the last week. We're going to talk about when I bought them, why I bought them, and most importantly, how I am going to manage the trades going forward. I have trades on the daily time frame, I have trades on the weekly time frame, and I have trades on the monthly time frame. I do like to trade as many different types of time frames as possible. I also like to trade as many different types of markets as possible, and thirdly, I like to trade as many different type of strategies as possible. I believe that has been a key element. Those three that I just told you about has been a key element in my trading success over the last 28 years. So we'll go through all those trades, and like I said, I'll describe when I bought them, why I bought them, and how I am going to manage them going forward. Been a really good last couple weeks, and I'll share that with you here in a second. After we go through the trades, we will talk a little bit about trader psychology. Always the most important skill in trading is the ability to create a plan and follow through with that plan, and not let your emotions take you out of your groove and get you away from your process. So always like to spend a few minutes because the trading psychology aspect of trading is the most important in my opinion, and I'm sure those of you who have been trading for some time would agree with that. After that, going to do a quick poem for my friend Frank, the trading poet. Always like to share one of those each week on the podcast. After that, I have gone down through my watch list, and I have identified some potential trades for the upcoming week. Usually I need a market to go up or down before I get interested in them, and that's where the patience comes from. But what I have added this over the last probably the last month. Not only am I going to take a look at potential long trades on the daily time frame for next week, also gone through and identified some short trades as well. Want to get a little balanced here. So long trades on the daily, short trades on the daily, and then also I'm sharing some weekly long trades that I've gone through and identified, and also some weekly short trades. I really do like to trade the weekly time frames, and over the years I have actually had my very best results with weeklies, and so I only do this podcast once a week, so I do like to talk about in the future weekly trades. You take them on a Friday because that's the end of the bar, and so like to share what I'm looking for in the coming week on Fridays, because some of those have been such good trades. All right, so we'll go through the daily longs, daily shorts, weekly longs, weekly shorts, and take a look at what I'm looking for as far as risk to reward ratios, what the setups are, and hope that's helpful for you to kind of get in my head and calibrate to how I look at markets and look at potential trades. And so that's going to be the format. All right, so as mentioned, I have to run the U.S. legal disclaimer. Hang tight. I'll be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay, Thanks for holding through that with me, and let's get started. First of all, we're going to take a look at the trades that I took on the daily time frame. All right, here we go. Concert Pharmaceuticals has turned out to be a really nice trade on the daily. They're a pharmaceutical company that makes a new drug for alopecia, or basically growing your hair. And let's take a look. You know, I've talked about Concert for a while. Getting back to patience. Patience in trading is one of the most important things. Let the trade come to you. Identify where the level is that you think the support's going to be. Make sure you have a good risk to reward ratio, but just hang out, sit on your hands, wait until the market gets to where you want it to get to. And that's exactly what I did on Concert. Well, here's the 200-day moving average. Of course, this is an important moving average. A lot of large financial institutions and advanced traders do like to trade off the 200 because they know other buyers generally will be coming in here. Of course, not all the time, but it gives you a good line in the sand to identify risk to reward. So I did buy Concert Pharmaceuticals back here on the 18th of November. What was the signal? Well, very simple, just to close under the 200, close back over the 200, and also a V2 entry signal here. Probably should mention this. If you would like to know more about V1s, V2s, which are entry signals that I use all the time, if you go to my YouTube channel under the lessons playlist, I have a video there called V1 and V2 entries. Helps to explain how I use them, why I use them, why they are so important. And in trading, having a confluence or combination of indicators lining up at the same time always improves your chances of having a profitable trade, and this is exactly what happened here. I might add, this is also a higher low close back over the 200-day moving average. You see here, we came down, we make a lower low. Yes, we had to close under, we had to close over. It did work for a minute, but then it failed. Here is the close under, close over, but this is higher than this low here, and higher low closes over the 200 tend to lead to more of a leg, which is obviously what we want, right? So here we go. Close under 200, close over 200, V2 entry. As with any trade, whenever I take a trade, I always place an emergency. I have two stops. I have placed an emergency stop and I place an end of day stop. My end of day stop on this particular trade would simply be a close back under the 200-day moving average, and then I place the emergency stop 2 ATRs below. And when I get to silver, shorted silver, I will show you the exact mechanics of how I do the position sizing. So again, as soon as I identify a trade, close under, close over, higher low V2, place the emergency stop, know where my end of day stop is, just simply a close below the 200-day moving average. To the upside, I always place a 1.5 ATR trailing stop level above, and when I get there, if and when I get there, then I go into trailing stop mode. And trailing stop simply means if I have a close below the previous day's low, after reaching the trailing stop level, I'm going to take half of the position. And that's what happened on Friday. So made the entry here at 478 on Thursday. We moved back. We moved all the way to the trailing stop level. That triggers my trailing stop mode. Then in the future, if I have a close below the previous day's low, I get out of half. And that's exactly what happened here. Got out at 509 because Friday closed below Thursday's low after reaching the trailing stop level. So this has been a really good trade. I still have half, but from entry to getting out of the first half there, up 6.09%. Pretty nice trade as it keeps moving up. As always, if I move up 0.45 ATRs from the previous day's close, I take profit. So I have the emergency stop, I have the end of day stop, I have the trailing stop. Those are all defensive moves. But if the next day moves up 0.45 ATRs, I'm going to take off 10% of whatever position size I have left. If it moves 0.9, right, 2.45 ATRs, then I get out of another 10%. And then if it moves another 0.45 from the second profit target, I get out of another 10%. So I like to play offense. I like to play defense in trading. I think it's very important. Same in sports. You have to play good offense. You have to play good defense. And I know this all probably sounds a little complicated, a lot of rules, and there are a lot of rules in how I trade, but I need rules. Otherwise, I'm just out there gunslinging like the wild west, right? But I do want to mention that I try to do this podcast to give you a good overview of how I'm trading, but I know there are a lot of rules here. So if you are interested in learning how I trade step by step, I do teach private one-on-one lessons in the evening time via Skype. I think the best way to learn anything is one-on-one with your teacher or your instructor. And I will talk about this more towards the end of the podcast, but I have my email in the description of this YouTube video. If you're interested in private one-on-one lessons with me, just send me an email, reach out, and we'll get going, and I know you'll be glad that you took the lessons. Okay, so back to Concert. Again, close under, close over the 200-day moving average. Had a nice confluence of signals with a higher low V2 as well. Emergency stop, end of day stop would just simply be a close below the 200-day moving average. You can see, was that Friday, Thursday, Wednesday, Tuesday? Tuesday almost closed below. Almost did, but it held. It held like the champion that it is, and that's why I stayed in, and it's turned out to be really nice. So again, took half off with a close under the previous day's low, locked in a profit of 6.09%. One of the best things in trading I have found is taking off half. It's one of the only win-win situations in trading. If Concert Pharmaceutical on Monday comes crashing down, closes below the 200-day moving average, I'm out of there, right? But I'm glad that I sold half for a 6.09% profit. If Monday goes racing up another 6% or 2% or whatever, then I'm very glad that I still have half. So that's the win-win in CNCE. So very grateful. This has been a nice trade on CNCE. Silver. All right, well, have not done a lot of shorting lately, but I did enter a short on silver, SLV, on Friday. Here we have the opposite. I was just talking about longs. You want to have a higher low leads to a nice, generally, or I shouldn't say generally, but more often than not, it does lead to easier up legs. Well, the reverse is true for silver. You see, we had a high over here, okay, and we were above the 200, then we lost it. And then it did go down, but now it's come back up, and on Thursday it closed above the 200. Now it closed below the 200. So that is my short. But you see how this short is a lower high. When you're long, you want to have a higher low, but when you're short, lower high. So here we were above 200, below 200, but it comes at a lower high ratio. Now, I'll tell you exactly how I set up this trade. So we know what the entry is. Lower high, close above 200, close below 200. Okay, that is the signal. Now I have to position size. Well, a good rule of thumb in position sizing based upon volatility is 1% of your capital. Let's just use a $100,000 hypothetical account. 1% of that is $1,000. So whether it's a long position, whether it's a short position, I take that 1%, again, hypothetically here, $100,000, 1%, $1,000, $1,000 divided by the value of the 2 ATR. The 2 ATR is $1.02. So divided by $1.02 tells me to short 980 shares of SLV. So I short 980 shares here. I placed my emergency stop 2 ATRs above, and we just did the math. If it does get there, how much am I going to lose? I'm going to lose $1,000, right? I'm okay with losing $1,000 on this trade because it's a small percentage of my capital. And if I hit it, it's no fun, hurts a little bit, but it's not going to devastate my account. Now you might ask, well, so you're willing to risk $1,000 on any trade? That is correct, but that does not happen very often. It only happens about 5% of the time. The other 95% of the time, if I take a loss on a trade, it's going to be because of my end of day stop. Well, my end of day stop is simply going to be any close back above the 200. I mean, if it goes racing up, gaps up, yes, okay, I have to get out, right? But if it just closes barely above, I go, okay, I'm wrong, and I take a very small loss. So now this is a short position, so it's a little bit different. So I place the emergency stop above, not below, and then I place my 1.5 trailing stop level below because I'm short. So if in the future, if the coming week, if silver does go down to my 1.5 ATR trailing stop level, in this case below because it's a short, then if I get a close above a previous high, I will get out of my I'll get out of half of my position. So I like this lower high, close above, close below the 200-day moving average gives me a very, very good risk to reward ratio. And right now, I basically shorted it exactly at the price because I make my entries at the end of the day, and this particular one is exactly even at the time. So those are the two dailies. Let's go over to the weekly positions. Wow, really had a great position here on IWM. This is a long position, had an intra-week rejection of the 300-day moving average. That was my line in the sand. If I'd closed below the 300, I would have just gotten out. Of course, I have my emergency stop down here. I have my trailing stop level up here, which it did get to 2 weeks after I bought it. So bought it here 167.19. It's 185.62. Took the trade, did get to trailing stop level, but have I had a close below a previous day's low? No, I have not. So I am still in the trade here. This particular trade, entry to position, current position up 9.83%. So nice trade there. And just want to point out here, we have this very nice risk to reward ratio, and that's the key in trading, everyone, risk to reward. You're not always going to be right. You have no control over the market, but you do have control over getting out quickly when you're wrong based upon a legitimate level like the 300-week moving average. So this trade up 9.83%. Microsoft, very similar, had a bounce off of the 200-day moving average, got in 221.34. Of course, I have my emergency stop down here. Where's my end of day stop, or in this case, end of week stop? Just simply a close below the 200. It has not happened. Here's my trailing stop level. Did get to it the very next week, so I am in trailing stop mode. So if in the future now I get a weekly bar that closes below a previous day's low, I will sell half. And that has not happened yet. Currently, this trade is up 10.34%. GDX. All right, here we go. All right, so this was a higher low V1. I spoke about V1s a little earlier. Again, go to my YouTube channel in the lessons playlist. Look for V1s, the V1, V2 video. Again, higher low V1 simply just means here's bar 1, bar 2 went below bar 1, closed above bar 1's close. It came from a higher low perspective. Remember, I keep talking about this. This low is higher than this low and this low, right? MACD also turned green, so lots of nice confluences in that trade. Place my emergency stop. My end of day stop on a V1 or V2 is a close below halfway of the washout bar or the trigger bar, and this happened here. So halfway here's 23.60. If I close below there, I would be out of the trade. That's my end of week stop. Placed my 1.5 ATR trailing stop level, got there the very next week. I'm also in trailing stop mode on GDX. So if I have a close below the previous bar's low, I will get out of half. This trade has been really great, been a bit of a monster, up 12.59%. The Qs. Okay, I took the Qs a couple weeks ago. This one has not moved that much, but just another good example of close under, close over the 200-week moving average. Came from a higher low perspective. Of course, we just talked about that. Also a V2 entry, bar 1, bar 2, bar 3. Bar 2 goes below bar 1. Bar 3 closes above bar 1's close. That gives you the V2 and close under, close over 200. Have my trailing stop level up here, have not reached that. So really what I'm concentrating on right now is just having the price hold on a closing basis over this 200-day moving average. This one is in the money, not a ton. Let's do a quick little measurement, rough measurement. Yep, up about 0.43%, but I will take it. TLT has been a nice trade, and this is a deep dip buy signal here. We have a close under the 30 RSI, close back over the 30 RSI. That is the main signal, but we also had a V1. Keep talking about V1s, right? Bar 1 goes below bar 2 goes below bar 1, closes above bar 1's close, and cherry on top. See the negative third ATR channel? 92% of prices tend to hold here and stop going down, hold, or go up. We had a close under, close back over. So those were the three signals on this trade. Close under the negative third ATR channel, close over, V1 entry point. Also went close under 30 RSI and over 30 RSI. Almost a trailing stop level, not quite there, but getting close. And if it does get there, I'll go into trailing stop. This particular trade, entry to current price up 5.05%. Joe, which is JO, which is a coffee. Well, I bought this last Friday when it had this bounce at the 200-week moving average. It was really scary to buy there, right? But my assumption was that buyers would come in here. If it didn't work out, I'd just get out. If we had to close below the 200, of course, have my emergency stop down here, have my trailing stop level up there. Not quite there on this particular trade now, up 5.32%. And then here is the final trade. This is a monthly trade. Remember, I like to trade all different type of time frames. I think it gives you a good cross section, and it balances things out. One time frame may not be working for you, another might. And why did I buy this at the end of the month last month? Well, the previous month we had to close under the 200-month moving average, close over. That's the main signal. Also had a V1 entry. The entry bar went below bar 1, closed above the close. Also closed below the negative third, over the negative third. Of course, emergency stop down here. End of month stop, where would it be? That's right, just a close below the 200-day or 200-week moving average. And then if I get to trailing stop level up here, I will go into trailing stop mode. This particular trade, entry to current price, up about 4.3%. So very grateful for all these nice trades. And you know, the last few months been pretty volatile, pretty brutal. So it's been nice to have some really good trades here. And you know, I have to say, I've had a lot of people call me over the last week. Now, these are not professional traders. They're more of your mom and pa types, and, you know, have a little bit of interest. And I've had several calls of people saying, hey, Greg, is this the time to be getting in the market now? And I have to be honest with you, that sent a little shiver up my spine, because when people who don't trade for a living, when they look at the market and see that it's going up and they think, ooh, it's safe to get back in, that's concerning to me. That's concerning me. You know, a few weeks ago, or I guess over a month ago, I started turning bullish, and thankfully I was correct, but I am starting to turn a little bearish right now. You know, a lot of people think we're going to rally into the end of the year, which is certainly possible. You know, we have the FOMC meeting coming out. I think it's baked in the cake that there's going to be a 0.5 point raise, and people are all excited about that. I was not excited about that because I saw that coming a long time ago, and I think the market did as well. So, you know, from a seasonality standpoint, we are in a bullish time of the year. We're in the holidays, but just my gut feeling here is that I'm a little concerned about the market going down at this point. And, you know, the positions that I have here, I'm grateful that they're up, and they're in nice profits, and I've been taking profit targets and things like that. But that's why I am definitely covering some wanting to cover on this podcast some potential short trades as well for a little balance. And I think the market's a little overextended at the moment. All righty. Well, oh my gosh. I forgot to do something very important here. Sorry about that. Oh, hang tight with me. All right. Here we go. Move that over there. Let's talk a little bit about trader psychology, shall we? Always most important part of trading really is, folks. You can take my word or you can learn it the hard way, but it is. This is from one of my favorite channels over on Twitter, the Divergent Trader, Alan Edwards. You can follow them at Atr Divergence. Always has good posts, things that are helpful, good trading words of wisdom. And let's see what he has to say today. Patience is the ability to wait like a sniper stalking its target. Confidence is the ability to trust yourself to strike at the opportune moment. Discipline is the ability to follow the pre-laid out plan to complete the mission. So let's break these down. Patience is the ability to wait like a sniper stalking its target. I've mentioned this so many times on the podcast. Patience, 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 patience. You've got to have patience and stalking that target, waiting for the stock or the market, whatever you're trading, to come to the level that you have identified. If it hasn't got there, well, then too bad. You don't get the trade, but they will get there. Warren Buffett says, the market, there's no 3 strikes rule in the market. What does that mean? It means that in baseball, you can't just sit there and wait for the perfect pitch because, you're going to get struck out. But in the market, there is no 3 strikes rule. You can wait as long as you want. In Market Wizards, I can't remember who the gentleman was. He says, I just wait for, money to show up in the corner of the room and I go pick it up. Well, I like that analogy. And as I trade year after year after year, it makes more and more sense to me. Just wait, just be patient. You don't always have to be in a trade all the time. Wait for it to come to a level that you've identified. Give yourself a good risk to reward ratio, position size correctly, place your emergency stop, know where your end of day stop is, place your trailing stop level, have your intraday profit targets. Not that hard, folks. The hardest part is sticking with the plan. So waiting like a sniper, stalking your target. Just wait till it gets how you want it. You are in control of this. Confidence. Well, after you've waited and now you know where you want to buy it or short it, confidence is the ability to trust yourself to strike. A lot of times you go, okay, if it gets there, I'm going to get it. Just like that JO trade, right? The Joe trade, the coffee trade, it looks scary as hell, right? It really did. But I identified, okay, when it gets there, I'm going to take the trade. When it gets there, or when it got there, I did take the trade because I do have confidence in that level. But some people may go, well, it looks pretty scary, and it's going down. Why would I buy here? In addition to having the patience, you have to have the confidence to be able to strike at the price that you want. And then discipline is the ability to follow the pre-laid out plan to complete the mission. And that's exactly what I just talked about, right? Having the patience to wait for it to get where you want. Having the confidence when it does get there to take the trade, and then the discipline to then follow what you're supposed to do after you take the trade. So really good information. Appreciate that, Alan. Please follow Alan, the Divergent Trader, at Atr Divergent over on Twitter. And then, gosh dang it. Boom, here we go. My technical issues happening here. This is Frank, a good friend of mine, Frank at FrankOD over on Twitter. Please follow him. He's a great trader. He's a great author. He's a great musician. He's a great journalist. And he's one heck of a great trading poet. Let's read what he has to say. There's so much to be thankful for. Where do we begin? For those lucky enough to be trading, that alone is a win. Although this is a time to share with Keith and kin, not sure I even know what that word means, a kind deed towards another should be a habit, not just a whim. And I really like this because, Frank has been in my when I did the live stream podcast each day, I always like to leave off the podcast, and I will today too, with please go out and do something nice for another human being, make the world a better place. And I'm wondering if that came from my podcast. Maybe I'm just hoping it did, but I think it kind of did. There's so much to be thankful for. Where do we begin? For those lucky enough to be trading, that alone is a win. Isn't that true? Just the fact that you are in the position to be trading, that really alone is a win, right? That's kind of a very deep, true statement. Although this is a time to share with Keith and Kin, a kind deed towards another should be a habit, not just a win. And I agree. Make it a habit. Try to go out, do something nice for someone each day. Go out, try to do something nice for an animal each day. Make the world a better place, and it's going to be good for you. And show some kindness to Frank. Follow him at FrankOD over on the twit, right? Okay. Let's get back, see if I can get, yes. Okay. All right, here we go. All right, here we go. Let's start with the daily potential long trades that I'm looking at next, that I'm looking for next week. All right, here we go. Let's start with Amazon. Well, Amazon is very interesting to me. We're at a 39.54 RSI level. You know, of course, one of my deep dip buy signals is it close under the 30 RSI and then back over. Now, of course, if Amazon did that next week, yeah, I'm totally in on that, because as you see the low we have here with the deep red MACD bars, that means, and you could just look at it graphically, that there has been a lot of momentum to the downside during this leg, clearly, right? But now we've rallied back into some green. If the price comes down to this low, the red bars here will not be as deep as these red bars. That's giving you a double bottom with the bullish divergence. Essentially, from a MACD perspective, what that's saying is that momentum is slowing to the downside. And the implication there is that if momentum's slowing, you're running out of sellers, and it's likely that you'll head back up. So I am looking next week for Amazon for an under 30, over 30. I also may take the trade if we reject this order block. Now, an order block is taught by ICT Mentoring on YouTube. I really would recommend that you take a look them up, ICT Mentoring. This is not one of the 5 approaches that I use, but it's something new that I have been learning, and has worked out quite well. This is an order block. Here we have a low that broke to the downside, then we reversed back up. From ICT Mentoring standpoint, he believes that if you come down here, this should be a level of support. So if we do get down to this level, about 89.60, I will go ahead and get long here. My stop would be a close under this low, and then of course I would use my 2 ATR stop. I'd place my trailing stop level, so forth and so on. So I'm really looking for some kind of rejection of 89.60 next week, and what I mean by that, it gets there and bounces, or it goes under, then it closes back over. That's what I'm looking for on Amazon. And of course, I mean, it really doesn't even have to be said. If it just keeps going down and goes under 30, over 30, then I will be looking for that. But it would give us a nice order block. It gives us the makings of a double bottom and a bullish divergence as well. So that's what I'm looking at. All right, Concert Pharmaceuticals. I'm already in this trade. Of course, we just already covered it. But if we were to come back, we had this big, strong move up over the 200. That gives me confidence that this probably is moving up. Doesn't have to, but also I wouldn't be surprised if we had a little backfill as well, because it has moved up substantially. So what I'm looking for next week is if we reject the 200-day moving average again, then I will just add back the shares that I've already sold during my profit taking on the way up here, because this particular level looks like it's going to hold. It has held right here, close under, close over, held up. So for me, I will be adding to the CNCE Concert Pharmaceutical position if next week we reject the 200-day moving average. And if we reject it, then I'll add. Of course, if we close below it, I'll get out, but then it can close back over. I would get in the trade again. Intel Corporation. All right, so Earlier in the trade, I was talking about V1s, V2s. The best V1s, V2s are what's called return to value V1s, V2s, or higher low V1s, V2s. And I teach this again in my private one-on-one lessons. So I'm going to try to just give you a little bit of an idea here. Generally, I was taught this by Dr. Alexander Elder. The two green lines here, that's the 1 ATR channel and the negative 1 ATR channel. Anywhere in here is what's considered the value zone. And big picture on trading, you want to buy in value, sell above value. When it comes back to value, buy, sell above value. Well, here we're clearly above value, but now we're coming into value. What I'd like to see now is I'd like to see the price consolidate here, then have a V1 or a V2 entry. One of the best technical indicators and setups in trading that I know of. And so, Intel was above value. I don't want to buy above value. I want to buy in value. So we've come back into the value zone. I want to see some stability. I want to see that there's some buyers showing up, and then the trigger would be a V1 or a V2 entry. So that's on Intel. Same on CarMax. Here we go. Look, we're clearly above value. Don't want to buy up there. People that bought up there, not doing so hot tamale, but we're clearly above value in between the green and the green. Now we are back in the value zone, and there is stability here, right? Yes, not surprising that we came back down after such a big run, but we are consolidating here, and consolidation leads to trends, or in other words, sideways motions leads to trends, right? Then a pullback into value, sideways motion. It doesn't mean it can't go down, but I love that we're above value, that we've returned to value, that we are moving sideways. We have some support here. We have some buyers. Now I'm looking for a V1 or a V2 entry. And again, go to my YouTube channel, look for the V1, V2 entry signals, or take the course with me, the one-on-one course with me, and I'll explain to you exactly what I'm looking for. But I am really stocking, right? We were just talking about stocking earlier. I'm stocking this, looking for what I need to get in the trade, and at this point, it would just be a V1 or a V2 entry. Tesla, all right. Well, last week I talked about Tesla looking for an under 30 over 30. I did not take this, and this is a good teaching moment here, everyone, because let's go back to what I was saying. Okay, here we're at 29.95. All right, is that over 30? No, it's not. But the next day, it went from 29.95 up to 39.66. Well, that is an under 30 over 30, but I didn't take the trade. Why? Well, because the risk to reward's not that good. Generally when you are using an under 30 over 30, the RSI levels go from 30 RSI to 50. That's usually when you're going to find some resistance. All right. So if I go from 29 to 39, then theoretically I have, let's just call it 40 for easy numbers, right? I have 40 to 50. That's 10 RSI points to the upside. Well, if my stop is a 30 RSI, it's 10 points to the downside. That is not an asymmetrical risk. It's not at least a 2-to-1 risk to reward ratio. I usually on under 30 over 30s, if it closes above 36, 35, 36, that's about the maximum that I'm going to take. And that's just discipline, right? So again, what I'm looking for on Tesla, and I do want to get into Tesla, but the risk to reward was not great. If I had taken the trade, well, I'd be down slightly. Now at this point, I am waiting for another under 30 over 30 on Tesla for next week. The dollar, UUP. Well, the dollar has really moved down strongly. I highlighted this abandoned baby up here. Island reversal bar. Whenever you get an island reversal bar where you have a gap to the left and a gap to the right, that's usually very bearish, and it was, my gosh. Now, I am looking for, going back to being patient, I'm looking for the dollar to come back down and test this 200-day moving average. If it never gets there, fine. I'll just take another trade, something will get there. But if it does get there, I am fairly confident that some buyers are going to show up here at the 200-day moving average, and at the very least, it will give me a good risk to reward ratio. Keep in mind, in this market environment, when the dollar is going down, that usually means the market is going up. Therefore, if we get down to the 200-day moving average, that may be the top of the market, because right now they are inverse of each other. So just to be clear, looking for some kind of either under 30, over 30 to get long the dollar, or some kind of rejection of the 200-day moving average. But bigger picture here, as far as the market goes, if the dollar gets here, finds some support and bounces, most likely the market will be going down. And it kind of references back to what I was just talking about, where I think we're getting a little toppy in the market. All right, so those are the dailies, long positions that I'm looking for next week. Let's take a look at some shorties. All right, shorts, shorty shorts. Cameco, CCJ. Well, first thing that grabs my eye is this big reversal bar over here that moves more than 1 ATRs. That's significant to me. We went down, we've rallied back into this. From a Fibonacci standpoint, everyone, if you have a big down bar like this, you're likely to rally back to halfway and fail. And look, it's exactly what happened. Look, got to about halfway, failed. Got to about halfway, failed. Got to about halfway, failed. Well, what I'm looking at now is I am looking at the 200-week moving average here. This 200-week moving average is still in the downside of this big bar. If Cameco rallies up to the 200-day moving average and fails, I will get short. Look in the past. Look, we rejected the 200, went down. We rejected the 200, went down. It doesn't mean it has to do it again, but it's showing the propensity that it does not want to get above this 200-day moving average. Also, overlay it into the fact that we have this big down bar. So any kind of rejection next week of the 200-week moving average, I get short on Cameco. Etsy. Well, I see the downward sloping 250 day moving average. If we close above that 250 or close back below, I will get short. If we have an intraday rejection of the 250, I will get short. It gives me a good risk to reward ratio, and it also comes from a lower high situation, right? If we reject it here, this low is, or the high is going to be lower than this. And again, if you're shorting, lower high is the way to go. If you're getting long, higher low is the way to go. So on Etsy next week, any kind of close above, close below the 250 or rejection of the 250, keeping in mind it comes from a lower high situation, I will get short Etsy. Southwest Airlines had a nice, beautiful run here, didn't it? Really, really did. Had some nice deep dip buys under 30 over 30s, and it's rallied like crazy. However, we are coming into a very significant level of resistance, the 200-week moving or day moving average. If you take a look at the weekly time frame, and I always like to look at multiple time frames, we are coming into some significant resistance on the weekly as well with the 50 EMA and the 50 SMA. That's concerning to me on the weekly. On the daily, it dovetails nicely with the 200. No magic about the 200 other than I know if I were long and it was rejecting the 200, I would be taking profits, and I know a lot of other traders are going to be doing that as well. And besides, it just gives a good risk to reward ratio. It may just keep going up, no problem at all. But if you position size correctly, taking a small loss, no issue. Even if you just got womped up on and you hit your emergency stop, if you position size correctly with 1%, it's not going to destroy your account. So on the weekly, I like, from a short perspective, that we're coming into some significant resistance here. And then on the daily, that 200-day moving average just gives me a really nice level to key off. And in addition to that, I was talking about double bottoms bullish divergences. Well, here's the opposite, double top bearish divergence. Look, we're making highs here. Look at the high MACD bars, right? This just means there's a lot of buying strength. Then we pull back into a little bit of red. Now we are getting very close to being just as high, but look, see how the little green here compared to the high green here? So this means this second top here is running out of buying momentum. So if I'm running out of buying momentum, I have a good risk to reward ratio, a level that I know some sellers are probably going to be coming in here. That's how I'm framing this as a short position for next week. And if it just goes down, I'm going to miss it. If it closes back above, I'll just get out of it. All right, let's go to some weeklies. All right, here we are on the weekly longs. Well, here is Amazon. Did you notice that on the daily I was looking for something long on Amazon? Well, same with the weekly. So I like when those two line up. First thing I notice, look at the lows here. Look at the deep red MACD bars showing a lot of selling momentum. Then we rally into some green. Pretty good. Now we come down. Are these prices lower than these prices? They are. Is the MACD bars as deep as this? No, they're less deep. Again, showing a slowing of selling momentum. Also, a couple other things from an ATR divergence standpoint. Look, here we're below the negative third ATR channel. Now we're lower and we're above the negative third ATR channel. This is called an ATR divergence. Let's look at RSI. Here we have a low. Look how low the RSI is here. Now we're lower. You see how the RSI is higher? So we have the trifecta here. We have a double bottom bullish divergence from a MACD standpoint. We have ATR divergences. We have RSI divergences. All sorts of good stuff. We're in the 30 RSIs. We're near the negative third ATR channel. I am definitely looking to get into Amazon, but I still need a signal. What is my signal going to be? Well, the most obvious signal would just be a close under 30 RSI on the weekly, close back over the 30 RSI weekly. You have to be patient. It's not something that I'm going to jump into now. I need to wait for my signal, right? Back to patience. But if it does, am I going to buy it? You betcha. 100%, because there's a lot of things lining up here. Again, it's not there yet. The picture is set, the stage is set with all the divergences I just talked about, but even when that's the case, I need an entry signal. And my entry signal will be some kind of under 30, over 30 on the weekly on Amazon. So check on that next Wednesday. Gold. All right, well, gold had a nice, this is again the weekly, had a nice close under, close over the 200-day moving average. Don't want to get long here, feel like it's a little chasey, but next Friday, if we have come down, rejected to 200, gave me a good risk to reward ratio with the close over the 200, that's what I would be looking for gold. So either next week a rejection of the 200 with a good risk to reward ratio, or in the future another close under, close over the 200-day moving average. Or of course, if it came down, I'd key off the 250 as well, or the 300. I like the 300 with the negative third ATR channel. But first stop would just be a little bit of a pullback, some backfill, which is to be expected. I expect gold to go higher, but in the short term, I would not be surprised by another test to the 200. And at that point, I would get long gold GLD. Lift. Well, I've been talking about lift for a while here. Look at the lows here with the deep red MACD bars. Look, now we're lower, no red MACD bars. This is double bottom bullish divergence, missing right shoulder, really running out of sellers here. So I like the big picture setup, but I still need a entry signal. We're a 34.82 RSI. I'm looking for an under 30, over 30 to get me long. Qs, well, I'm already long Qs, but similar to gold, we had a nice move above the 200. Would not be surprised if we had another rejection of the 200. If I'm already in this trade, but if I was not in this trade and it came back down, tested the 200, closed back above, I would like it, especially in context of, see the big up bar here? Well, from a Fibonacci standpoint, a pullback to the halfway would make sense, and there would be some inherent support there as well. So I love how the 200-day moving average lines up with the halfway of the bar. So you have two things there, a pullback to 50% and also the support of the 200-day moving average. But again, I'm already in this trade, but if I were not, if we come back, test the 200, close back above, I would get long Qs. Back to Tesla. right? Like it on the daily, also like it on the weekly. I've been mentioning for weeks and weeks and weeks, if Tesla can reject the 200-week moving average, I would get long Tesla. I'll get long Tesla on the daily if it goes under 30, over 30, or hits that order block like we described, or on the weekly if we have a rejection of the 200. I just want to see that the market goes, okay, I have to test this 200, and if it goes closes below, not in, but if it closes back above, I'll say, okay, the test is complete. It tested the levels under the 200. There were no more sellers. I'm going to get long, or simply just an intraday, intra-week rejection of the 200 would definitely get long. You know, Tesla at the highs was at about 412. Now we're at 182. You know, there's a lot of drama going on with Elon Musk, with Twitter and Tesla and all this garbage, but I like Tesla. But I want to buy it where I want to buy it, and I want to buy it, and we'll only buy it on the weekly if we reject the 200-week moving average. Oil. Well, oil has certainly come down. Here's the 200-week moving average. This is one possibility. If we get a rejection of the 200-week moving average, I would get long next Friday on oil. Also, I like the upward sloping 100. We don't talk about the 100 a lot, but I like the upward slopings. And you see how the 100 also kind of dovetails with this previous resistance here at the highs here. Once you break out of resistance, that resistance now becomes support. So there should be some support right in this area, and it does line up nicely with the 100-week moving average. So am looking to get long USO. Depending on if there's a V1, V2 rejection, along with the rejection of the 200-week moving average, I will take a shot at it there. But my ideal would be this upward sloping 100-week moving average. And again, that dovetails over here with this previous resistance, which should now act as support on USO. And then VIX, well. VIX made a 16-year low, everyone. VIX is essentially pricing in that there will be no more drama or volatility ever in the history of the world. Well, we know that's not true. I remember saying that. Right before COVID. I remember saying that at the highs down here. And, you know, we went from 17 at some point, got up to 43. VIX is something that rarely works until it does. But this is getting a bit ridiculous. We're at 29.07. This makes for a very easy trade on the VIX, right? Because we close at 29.07. Next week, if we close above the 30 RSI, there's my signal, right? Let alone it's so low, it can keep going lower, everyone, right? But that's why I'm looking for the entry signal. But do we feel like there's not going to be any more volatility in the future? I highly doubt it. But the chart will show me if people are buying, and that will simply come from an under 30, over 30 RSI level on VIX on the weekly. If it doesn't close above 30, I won't get in. But if it closes above 30, I'll get in as long as it closes somewhere between 30, 35, 36. If it closes at 29 and next week it's 50, of course I'm not going to buy it. It's too chasey. If it closes at 40, I'm not going to buy it because then it's not a good risk to reward ratio. All right, lastly, let's go to the weekly shorts. Only have a couple here. And again, everyone, lots of rules here. And I'm not expecting you to get this all. But I'll talk again at the end of the podcast here about if you do want to learn this, if you want to have lessons with me, how we can do that. And then you will have all sorts of rules in your head by taking the course. Adobe. Well, first thing I noticed here on Adobe, look at this huge skyscraper bar down. What did I say about big skyscraper bars down? If it rallies to about halfway, it probably will fail. Well, look what happened 2 weeks ago. Got to about halfway and then failed. This one got to halfway, failed. Look what we have here. We have the 300-week moving average right around the halfway of that bar. So if it does reject the 300 next week by Friday, I will get short. My end of week stop will be a close back above the 300-week moving average. Now, earnings is coming out on the 15th. So this would be a short trade because I never hold through earnings, whether I'm long or short. But if next week we rally up here, reject it, gives me a good risk to reward ratio, I will get out and probably hold it for a week, a little bit more of a scalpy kind of trade. But I do not want to hold, and I never will hold through earnings. Last but not least, XLRE. Well, here we go. We have the 200-week moving average above us. We've had a nice rally, obviously, off the low. If next week we reject the 200-week moving average, or if we close over and then close back under, I'll get short. If we reject the 200-week moving average, I'll get short. Let's look at the higher time frame. Well, we are running into some resistance here, this -1 ATR channel on the monthly, right? If you're trading weeklies, I want to look at the monthly bars for some context and see how it's right about the halfway of the big monthly bar down. I think we're going back down on real estate. We'll have to see, but I'm just waiting for the correct signal to do that. But again, looking at the monthly, we have a big skyscraper bar back down. Resistance level on the daily, on the month, or on the weekly comes right at about 50%. So that's giving me some confidence that that is not going to go much higher than that. And then, of course, I have a really good risk to reward ratio. If I reject the 200, just very clean, any simple close above, I get out. So, as I mentioned, if you would like to study with me, and I think the best way, whether you're learning to trade, playing tennis, anything, is to have a one-on-one coach that you can ask questions to, that will answer every question that you have and teach you step-by-step how to trade these strategies. And that's what I offer. I teach only in the evening time via Skype. The cost of the program is $1,750, but it is worth every single penny. I've trained hundreds of people around the world, and you're going to learn a lot. I think it's the best $1,750 you've ever spent. Currently, right now, I am completely booked up with my lessons, but they go pretty quickly. And so if you'd like to kind of get in line, all you have to do is send me an email and say, Greg, I'm potentially interested in your lessons. I will reply and say, great, let's do a Skype call. Skype call is free. It's not a sales call. I promise you. I just want to learn more about your trading, your challenges, your trading goals. It's a great time for you to ask me any questions about the podcast. And once we're done with the call, totally up to you. You're going to have to reach back out to me and go, Greg, I decided I want to take the course. But it's a great course. I'm not going to let you go until I know that you know all the rules step by step, and you'll have to prove those through me to the lessons. There's 15 hours of instruction, five sessions. Each session is 3 hours. If you like online courses, I have a really good online course that I've sold many of these on udemy.com. The link's in the description. It's called the Deep Dip Buy Stock Trading Strategy. Most of the trades that we've talked about today are this particular strategy, and that course is very affordable. It's only $12 to $15, and it's a great course, lots of content, 26 videos, 9.5 hours of content, 15 study guides, and it's a great place to get started if you're new, or even if you're not new, because it's such a step-by-step, and it's so affordable, and it's so rich with content. So the link is in the description there. Thirdly, if you like this podcast, I really would sincerely appreciate it if you could hit the thumbs up button. It helps to build the channel, helps YouTube know there's some valuable content here, and it's free, and it only takes a second. So if you found anything valuable today, if you could hit the thumbs up button, I'd appreciate it. And then last, and always most importantly, please try to go out and do something nice for someone today. I mentioned this earlier, but it's if you're in a situation and someone does an act of kindness for you, it always makes you feel good. You're always appreciative. And so there are a lot of people that would need help during the day. Just one small act of kindness, if you could do it, get in the habit of it. It's going to help them. It's going to help you. And then if you could also help out an animal today in any way, shape, or form, even if it's just give them a little scratch on the head, a pat on the butt, throw the ball, take them on a walk, they enjoy acts of kindness. So it's something I try to do every day. One random act of kindness for another human being, another act of kindness for an animal. It's good for you, it's good for them, and it would make the world a better place. So I hope you had a really good Thanksgiving. I hope you have a nice weekend. In my humble opinion, It is likely that we could rally into the end of the year, but on the other hand, we are getting a little stretched. Told you about all the calls that I got from people who are thinking about getting in the market. That by itself scares me a little bit. So as always, be patient, position size correctly, adhere to your process, and stay in this trading game for the long term. That's how you're going to make the money. So if you have any comments or questions, put them in the comment section. I'll do my best to get to them. Have a great weekend. And on the way out here, I have to run the U.S. legal disclaimer. Thanks a lot, everyone. Talk to you next week. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.